We begin with a flurry of financial urgency. This morning at exactly 9, markets were jolted by an unexpected development in the Iraqi dinar's exchange rate. Traders were stunned as the currency leapt from its usual stability, sending ripples through forex desks in Baghdad, Dubai, and beyond. The opening of Asia's trading floor set off a wave of activity, with spot prices shifting in ways that many had not anticipated. In a matter of moments, whispers became headlines, and global monitoring stations registered the event as a potential turning point for one of the world's less volatile currencies. The tone across market commentary quickly turned to alarmed interest, with analysts reaching for their phones, data dashboards flickering in real time. This was not a planned announcement, not a slow-rolling policy shift. It was a surprise move, unheralded and immediate. The Iraqi dinar has long been pegged to the U.S. dollar, and while some small fluctuations are expected amid routine supply and demand shifts, a sudden jump at the exact moment that trading opened caught observers off guard. Specialists on the ground in Baghdad reported that the central bank statements this morning were sparse. Indeed, virtually non-existent. Instead, the initial signals came from the trading floor, from brokers sending out price feeds from electronic platforms. Suddenly, the dinar traded stronger against the dollar than it had for months, prompting a scramble for confirmation. Clients were calling their brokers were calling central bank liaisons, and analysts were gripped by a sense of mounting anticipation masked under urgency. By 9:10, tentative confirmations began to trickle out. Some trading firms reported that they were seeing a bid price that exceeded what official channels had listed just moments before. Other sources echoed that there had been no official notification. The sense of confusion mingled unavoidably with excitement. The currency was showing strength, but under what authority? Was this a deliberate policy pivot, a sneak peek at a new peg level, or simply a technical swagger triggered by high-frequency trades reacting to some mistagged data? Without a confirmatory statement from the Central Bank of Iraq, uncertainty took center stage. But the markets, ever reactive, were already pricing in a new reality. As the minutes passed, coverage from financial news services galvanized the narrative. Headlines flashed across ticker screens. Iraqi dinar rates surge unexpectedly at 9 a.m. The tone was urgent, alert. Price charts were overlaid with the sudden spike, and volatility indicators gleamed red. Comparisons were drawn to past rare surges, though none had followed precisely this pattern. A few commentators invoked similar surprises in other emerging markets, where either policy shifts or rumors created speculative frenzies. This, they said, could be something similar, or it could be a harbinger of a more meaningful financial recalibration under the cover of early trading hours. Either way, the electricity in the financial ecosystem was palpable. As trading screens blinked with the new numbers and news feeds hammered home the word surprise. Across Baghdad, market participants scurried to adjust. Currency exchange booths in central markets were flooded with customers asking what was happening. Some reported that customers were exchanging U.S. dollars for dinars at newly improved rates. Others warned of a cautious wait-and-see approach. Around the world, speculation began to swirl. In Middle Eastern analysis circles, questions were raised. Was there a policy decision imminent, maybe tied to oil revenues or shifting economic partnerships? Was this tied to internal economic reforms? Or was it purely a speculative event, destined to unwind once clearer communication arrived? For stakeholders in infrastructure projects, for remittance networks, for international aid workers and planners, the news pronounced an immediate challenge to assumptions, and a quiet scramble for clarity began. Presenters on business channels adopted a heightened tone. They emphasized that this kind of unannounced shift, if confirmed, could have significant ramifications for inflation, for import cost calculations, for government budget planning. Some analysts emphasized that a stronger dinar could ease inflationary pressure by making imports cheaper, but could also hurt export competitiveness. Export-dependent sectors would likely need to adjust quickly. Within minutes, discussion topics spanned domestic economic strategy, oil revenue distribution, currency board management, and possible IMF or World Bank responses if this indicated a shift in macroeconomic orientation. As mid-morning approached, A calm attempt at rational analysis began to emerge. The Central Bank of Iraq, still silent, seemed deliberately withholding comment while monitoring reactions. Regulatory logs in some systems indicated that a few large trades had executed at prices noticeably stronger than previous thresholds. Some market makers said they had set temporary freeze limits, refusing to transact beyond certain spreads until official word came. Yet other smaller players said they were unaware of any coordinated policy change and that their price quotes had simply followed raw algorithmic signals. Meanwhile, social media added layers of rumor. Whispers of new foreign investment energy, of budgetary surprises, of an internal meeting between economic policymakers, all unverified. Yet the speculation flooded chat rooms. By 9:45, more measured reporting began to accumulate. Some outlets began phrasing the situation with qualifiers. A possible flash event on the dinar markets. Possibly a glitch, possibly early hints of policy. Market impact assessments were emerging. If sustained, consumers and businesses would see immediate changes in pricing structures, from fuel to medicine. Importers paying in dollars might rejoice. Exporters might brace. Public sector budgets, often pegged to the dollar for procurement, would need recalibration. Analysts cautioned everyone to stick close to the data. If rates reversed by midday, this could be chalked up to technical anomalies. If they held firm, this could mark a new era. It was at that moment that some cautious breaking news came from financial communicators in Baghdad. An unnamed central bank official, speaking off the record to select journalists, said that the bank was investigating the reason for the rapid shift. There was no official confirmation yet of policy change, they said, but everything was under review. Markets took a collective breath. The ambiguity served both to soothe and to heighten the stakes. Without confirmation, the rally in dinar value remained speculative and subject to reversal. Yet the very lack of immediate contradiction allowed traders to maintain at least a portion of their position advantage. 10 minutes later, a statement was released through the official central bank channel. It read that all was nominal, that there had been no authorized rate change, and that they were reviewing transaction logs. The tone was cautious. They invited patience and promised a full explanation at the end of their internal review. With that, some of the more speculative bids began to fade. Others stood firm, pointing to the possibility that the event was a soft launch of a forthcoming policy, to be confirmed later. The dinar's price retreated slightly, although not entirely returning to pre-surprise levels. The market settled into a new equilibrium, a bit higher than before, but not as dramatic as during the spike. Now, as we pass the 12-minute mark in this breaking story, the focus shifts to what's next. Will the central bank confirm a new peg or a managed float? Is this tied to broader economic restructuring or budget recalibration? Will foreign exchange reserves support this new level, or will pressure force a retreat? Stakeholders in reconstruction efforts, aid, commodity trade, and regional financial stability are monitoring closely. For the Iraqi government, the window is narrow. Clarification must come soon to quell confusion and anchor expectations. For international partners, signals will come. With each hour of silence, speculation deepens. With each public clarification, market confidence shifts. By mid-morning, talking points are circulating among financial teams. Assess your exposure, review your contracts, prepare for potential ripple effects. Treasury functions in multinational corporations are evaluating swap lines